Hello and good morning, everyone. This is week number 14 of the year, where we crack on by having a review of the week ahead, market moving events, volatility pockets, and also one or two pairs I want to keep an eye on where I feel like the volatility could be a little bit higher than other pairs and the payoff potentially as well. Starting off the weekly analysis by having a look at CFTC report. If you don't know what the CFTC report is, basically every Tuesday, data gets compiled by speculators, hedge funds, and large commercial traders, and they get published on a Friday too, so we can see what their positioning is. And it gives us largely an idea of how heavy people are positioned. Are they bullish or are they bearish, for instance, on dollar or euro? And we can use that advantage to see where the trends are going, and also sometimes to foreshadow some reversals. So this the latest one has been compiled on the 29th of March, again last Tuesday. It's been published 1st of April, and we're going to go down here to have a quick look at the snapshot, and then we can go a little bit more into detail what happened. If you look at the currency pairs, euro is still bullish but decreasing. Pound is neutral bearish, so it's AED and CHF and JPY are bearish, and they're both increasing. Gold is bullish as well, increasing, and Canadian dollar almost flat. So I always have a more keener eye on euro and pound, as CFTC data tends to have a lot of movement there. So for the euro, one of the big switches came about 15th of March when we saw that huge amount of long positions squared up. And since then, they haven't really added those back. So now we're back to 200,000. However, shorts covered a little bit as well. That meant that the net positioning on the euro is still sitting now just under 3 billion. And it's good to understand why some people are long and why some people are short. Right now, there's a lot of speculators believe that the ECB will have to move. So the European Central Bank will have to make a move on the interest rates, and they're buying euro ahead of that, because once the news comes out, you can see euro climbing very easily, a couple of handles. Unfortunately, news doesn't seem to come out, so they made some shifts in. Let me take you now to the charts, because it's worth explaining that. Really, just adding a little bit more reasoning to the CFTC report. So I believe I was in February, if memory serves me. In February this year, the ECB sounded like they came out to say we're going to raise rates, right? So here we had a really hot inflation print, and then I believe it was on the 3rd of February, the press sounded really like that they're going to raise rates, but that market didn't really follow through, and eventually Russia attacked, and then the whole thing just fell apart, and then we came down lower, and now we're trading in these ranges. There's not a lot of hope to regain higher levels unless something shifts in the European economy, which right now doesn't seem to be the case. Long story short, just really wanted to explain what happened with this positioning. So once that fell through, market really started to scale back that the bets on the bullish bets on euro. Pound, on the other hand, is a little bit different. Pound, the Bank of England was raising rates, but they started to get worried because they said, look, the economy is going to get worse as the year moves on. Everybody's thinking, oh no, let's start shorting pounds. So you can see that the build-up of pound positioning on the short side is keep hammering on. And there's probably not a lot stopping it. I've read one or two reports that says that seasonality in pound is very positive in April. So basically they take like 20 years of data or sometimes more to figure out what the seasonality could be for a particular currency, right? So that, for instance, they will go back and say in 2021, in April, pound was positive. It had like a very undecisive candle. So as a trader, it doesn't always help you, but you could maybe go towards a bullish bias. In 2020, for instance, we had quite a strong bullish one as well. And again, it was somewhere in the middle of the road. And in 2019, April, we had an undecided candle, a little bit bearish. Let's have a look at 2018 as well to see if there's much to it. So over the last 5 years, it's very mixed. I wouldn't say April is just definitely going to be bullish or definitely going to be bearish. So we're going to add a little bit more of macro analysis to figure out what direction pound should be headed in April. There's some I love about April because it's the beginning of the of the new quarter and the first week, you're going to see a lot of volatility hitting the market. You're going to see a lot of movements. So a lot of exciting trading opportunities, which I'm very keen to capture specifically on pairs that actively trade. So one of them is pound dollar, and the other one is Euro USD. Right now, we're seeing a formation here, which is incredibly interesting. I like to point out something that's called inside bar, inside day. There's many names for it. I call it inside bar. Basically, what we're looking at daily candles. And when the daily candle, every daily candle has got a high and it's got a low. Sometimes, right, the following day doesn't break out of that range. And then that's where you get the inside day. And the logic here is that you're creating momentum here. Actually, in this case, we had 2 days closing inside this day. So basically there was Friday and Thursday, did not manage to break the range on Wednesday. This tells us traders 2 things. One, it's a very undecided market just now. They're not really sure which way they want to swing it. And 2, there's 2 ways of trading it. One, there's one way that inside bars break out is they just break out, touch back and go, right? And create quite a huge swing. The other way they do it sometimes, and actually a lot of times, is they break out, come underneath that range and then break this way to revisit the other side of a range. If you know Trader Dante, he talks a lot about this. So there's, again, 2 ways that inside bars work. That's why the high and the low of that level is so crucial to work with. It's one of the rare times where I say that technicals matter a lot in FX, and that's when we see formations like that. Again, I'm going to reiterate that how it works out. So you either see a break underneath it, a touchback, and that's the place where you want to see a rejection and then start shorting it for continuation. Other times what you see is you see a fake out and a quick rejection back underneath that level, and usually some sort of a rejection to then trade on the other side of that. And you can see that that's quite a good amount of pips here. It's nearly 200 pips to capture here. Worst case scenario, let's say with your stop loss being a bit wider, and maybe you get some slippage, and maybe you don't capture the entire move, but there's at least about 100 pip move here to catch once we're going to see it move out of those ranges. That's something you want to pay attention to as we move into the next week, because volatility is going to be quite strong. But I digress. I really wanted to talk a little bit more about the CFTC data and see what it's throwing out. So again, the bearishness on euro is kind of continuing. On pound is really going stronger, and on Aussie and NZD, it's a bit unexplainable. Market is quite short Aussie, and Aussies keep pushing higher. So I really want to see these short positions unwind before I start selling pound Aussie too. I think at this point it's still quite bullish for very good reasons. Same thing here on yen. Market is really short yen because of inflation. And now that takes me to the next thing I wanted to show you. Back onto the chart. This chart here on the right side is the weekly. You can also take it down to the daily. I don't think it will make any huge difference in what I'm trying to explain here. Basically what this is market break-even inflation. It's the way where market participants hedge against inflation 5 years out. And you will find it very interesting because this chart very closely leads the way in AED, JPY, and all other yen pairs as well. So you can see that it kind of mirrors it. It's not more recently. It's been like this for years and years and years. It's a pretty accurate way of figuring out where yen pairs are headed. Actually, that was one of the things that alerted me that AED, JPY is about to break out, and we kind of positioned long in our private trading room. So right now, let me take AED JPY away from that chart. I just really wanted to show the correlation so you see how important it is. Right now, you can see that market has so inflation expectation hedges are coming off a little bit from the 3.5 level. Maybe we hit a ceiling here, maybe not. It's really important to see how market progresses from here. This is not the place where you want to get too aggressive because we're still at the edges. You really want to see the momentum come in. And for that momentum to come in, one of the key drivers right now of inflation globally is oil. So you want to have a look at what the oil market is doing as well to figure out if this is the top and you want to start shorting your yen pairs, or if you want to buy the continuation. Right now, oil finally, so I'm looking at WTI and on Brent, is starting to trade under a 100 handle. On the weekly, some sort of a bearish reactions as well. And the monthly that we just recently closed here in April, you can see you could call it a pin bar formation to some extent. I know it probably doesn't hit all the criteria, but there's a huge rejection here coming off the 125 level. And there's a lot of market participants and traders that say this is the top and we're headed lower from here. But for this to be true, you want to see 1 or 2 shifts in the market. And I don't think those shifts are there yet, but we will monitor these closely. Once this starts coming down, you can expect your yen pairs to come down, your inflation expectation, and you've got a juicy trade on your hand. But until the trade is coming through, you're really front running the trade here. And when you front run trades, well, you've probably done it before. You're buying too soon, or you're selling too soon. You can get run over and lose money. Particularly in moves like that, you don't really make money being early. You make money when the move starts, you know, accelerating. You want to be part of the meat of the move, so you don't have to worry. Is this the top? You want to say, okay, this is obviously the top now. Let's start shorting, and then you're in a better position to make decisions. Also, take a little bit less risk, hopefully. But that's why I wanted to explain about yen. So yen pairs are still already short aggressively because they think inflation has not peaked yet, and therefore they are hammering it down. Next week, we have 1 or 2 important data points which I like to address, and also the direction possibly market could move. The first one that is important to us is the RBA meeting, and that moves Australian dollar mostly. I did a longer video about it on my YouTube channel where I expect AUD to head, the reasoning behind it, and I went through all the older statements by the RBA and explained what the data points they're using to make decisions based on market behavior and also data. Long story short, we came to the conclusion that EURAUD is very vulnerable into that, and we started shorting it. I had a couple of signals to short. I actually ended up not shorting it, but the direction we want to go is short EURAUD ahead of the RBA meeting. I feel like that these lower levels, once 46, about 40, could possibly be hit by Monday or Tuesday. So it's still about 100 pips away. Another way of gauging where the direction of EURAUD should be is always worth having a look at the yield spread between these 2 countries. And if you don't know what yield spread is, it's basically it's the spread or the difference between the German 10-year yield against the Australian 10-year yield, and that tends to lead the FX market in the long term. In the short term, there's different things that could decouple from it, but in the long term, you find that EURAUD will always follow the yield spread. And I'm going to take this all the way to the monthly for you, so you can just see the significance of the yield spread. So the line chart is EURAUD, and the candlestick chart is your yield spread. Again, major turning points is always given away by the yield spread. Actually, the yield spread is leading the way most of the time. Again, long term, you want to look at the yield spread if you're a trend trader, if you're a position trader. In the short term, everything could happen. In the short term now, though, and the long term, we're both kind of in line where we think EURAUD has got more room for moving lower. There's 2 reasons behind it. One is because commodity currencies are quite strong. Australia is one of the main commodity exporters, and it's benefiting from the additional demand. Another reason is that we believe that RBA could switch, or is very likely to switch hawkish and start raising rates this year, and they're going to give us signals to how they're going to do that. So market likes to front run these themes. When they got it in this head that such and such could happen, they like to front run these themes. And in my opinion, there's still room a little bit to move lower ahead of Monday or Tuesday. Obviously, we've already been in this we've been in this trend for quite some time, actually all year, I think. So there was already a lot of pips to work with. Be that as it may, I think there's a little bit more left in it. And then after the RBA meeting, we're going to rethink it, because their decision can make a lot of difference to how AUD will be trading on all other crosses as well. And since we're ahead of the RBA meeting, it's worth having a look at what interest rates are, so what the market is saying. It's called the RBA rate indicator. Again, that's a way of market hedging away what they expect RBA will do in the future. So if I show you the implied yield curve for the year ahead, it gives you kind of an idea how to anticipate market movements. The blue dotted line is where interest rates are right now, right? These darker blue columns is where market is pricing where interest rates will be in April, May, June, July, August, and so on and so forth. There was an interesting thing that happened on Friday, and it looked like the market was trading below what the interest rate currently is. So they kind of gave me an idea you want to be long AUD as market is mispriced here, which more or less it played out on Friday. So they had some bullish reaction on Euro AUD, as in it dragged Euro AUD lower. Same thing on Friday for GBP AUD, quite strong movement again because market was mispriced. And I think to some extent we saw some bullish movements AUD and AUD JPY as well. So it was quite in unison. Mainly again, market was trading below what the interest rate is. The interest rate is 0.1 or 10 basis points, but it was trading at 7.5. So I feel like Friday kind of did what it needed to do to merge where the interest rates are. That's for the April meeting though. Further out ahead, market is seeing that in May, interest rates will be 14 basis points, June 28, 48, all the way by the end of the year. They're expecting interest rates to be about the 1.76 or 176 basis points. So it's quite aggressive, particularly if you looked at RBA says, look, we're kind of just looking now at inflation and supply side, and we're looking at the Ukraine war, and we're not sure yet. So they're quite neutral. They're not saying we're going to raise rates, but this is market anticipating what they will do. And in my opinion, and also in my expectation is once RBA starts committing to interest rates, and I feel like there's going to be a bit of a repricing because this is a bit too aggressively priced for what the RBA could possibly deliver or even pre-commit. So they might come out next week and say, okay, we'll raise rates 3 times this year. But what this here is telling you, it looks like they're expecting him to raise rates at every single meeting, right? And I don't think RBA will give that signal yet. And that possibly could also mean that AUD could suffer if they start getting hawkish. But again, nothing you want to front run. You want to wait for the meeting to come and go. And there's loads of trade opportunities after that. But ahead of the meeting, again, based on what we discussed and the way the yield curves are, yield spreads are looking, Euro AUD is primed to still trade one handle lower. And that's the direction I want to trade next week. So that's one of the things that where we have volatility hitting on Tuesday. Another thing that is quite volatility moving is the US ISM services. So US ISM services, we had US PMIs on Friday. They disappointed a little bit. They still printed quite strong. We right now want to see what the US ISM services does. And why? Because inflation is incredibly high. You've all seen it. If you're living in the US, you've seen inflation high. If you're living in the UK, inflation incredibly high as well. And that is causing that's a cause for concern, because if inflation puts off people buying stuff, or the consumer, right, it's putting off the consumer buying, you'll find it in the ISM services as well. You will see them pulling back. So if you see these numbers drop dramatically from the 58.6, and it's quite frothy what they're looking at, you can expect that inflation is hurting the economy. And that's when you can do a couple of risk-off trades, like maybe short the S&P 500 intraday once the data comes out bad, or maybe have some movements on yen pairs. In any other case, if it still trades, if the data comes to quite strong, we're not expecting it to have any material deterioration. But I'm going to also do, I'm going to show you what happened over the last 3 or 4 meetings. So on the 3rd of March, we had a reading. On the 3rd of February, we had another ISM services reading. On the 6th of Jan, and the 3rd of December, and also the 3rd of November. So we're going to have a look at what the price action looks like after the ISM services PMI gets printed. It's quite an important data point. I just really want to see what it kind of looks like on the chart, so you get a feel for what the volatility will be on that day. We're going to take a couple of different pairs. So we're going to have a look at USD JPY, but we're also going to have a look at, let's have a look at Euro USD and see what the reactions are to those ISM services readings. So the last reading we had was on the 3rd of March. 3rd of March was around this candle here. So looks like we had a bit of a bearish reaction on USD JPY. and quite strong bearish reaction on EURUSD, and with some follow through as well. So that's quite encouraging, isn't it? We know there's going to be a spark of volatility around that date. But let's go a little bit further just to see the historical evidence in that. So on the 3rd of February, we had another reading and a very strong reaction on EURUSD. Mind you, that was the same day we had the ECB, so probably we won't be able to just attribute the entire volatility to the ISM reading. But looking at the USD JPY, maybe gives away a little bit more. On the 3rd of February, we had, again here, some quite strong reversal actually on ISM, and posted as well. We had some good follow through. Before there was the 6th of January, which was around here, and some clean, strong rejection, bearish, and some good follow through as well. And see what the EURUSD did on the 6th of January. Again, it was really early in the year, bit of indecision, and then a rally after that. Not a lot to work with. Let's check the other 2 data points we've jotted down, which would have been the 3rd of December. 3rd of December, nothing. EURUSD was dead, but just the JPY created an incredible bottom to some really bearish rejection, right, in the beginning of the day, but then just a flip-flop totally, and it did not stop for a good 300 pips. So it's not without nothing, the ISM reading. You tend, picking the right pair, you tend to see some good volatility on the day, and there's some good follow through in the following days as well. Last one I'm going to check is just the 3rd of November, again, just to get a feel for it, what it does. Indecision here, and the following day, some good follow through on EURUSD, some bearish waffling about it eventually when it started tanking. Actually, I remember trading here. I was so bearish EURUSD. I shorted it here, and then it went out a break even. Then I shorted it again, and then it came back and then took me out a break even again before it really took off lower. Just a little bit of a war story here. So we've got 2 data points we want to be working with. One, ahead of the RBA meeting, we are bearish EUR/AUD. After the RBA meeting, we're going to make a new decision. ISM reading, we know there's going to be some good follow through usually on yen pairs the following day, and we'll be gauging that to see what the inflation expectation does. Let me show you that. So once we see what inflation expectation is doing on the day or after the day of the ISM, I'm going to have a better understanding of what my yen pairs will be doing. There's a lot of good traders to say, look, yen pairs are top, it's time to short them. I'm not quite there yet. I don't think it has topped yet. I want to see that data, some sort of a confirmation, but definitely some good juicy trades coming up post the US ISM on Tuesday on the yen pairs. We will also have FOMC minutes. I'm not too sure if it's going to be a huge market mover just yet, particularly because we obviously see loads of inflation. We saw good US data, and I think market is said that the Fed will be hiking rates 50 basis points. So I'm not sure that the FOMC minutes will give a whole lot away just now. So it will be more a wait and see scenario for me. And apart from that, we're going to have unemployment rates for Canadian economy, and ahead of that, is expected to see a little bit of bullish cat bets as market thinks that the unemployment will be quite the jobs data will be strong, and that will jolt the Bank of Canada to make a quicker move on rates that could be positive Canadian dollar. But that's nothing I want to front run either. I think I want to be I really want to focus more on what my AUD pairs are doing ahead of that meeting, and I also want to focus on my yen pairs after ISM. So we've got 2 sort of FX pairs where you're going to see good volatility. If you just really wanted to take it down to 1 tradable pair, I would definitely go for AUD JPY. I think like the most volatility going to be in this pair. If I take it down to intraday as well, you can see it's quite pleasing. A little bit of chop, but then you get good moves out of it. It's not too much of a mid killer. You're going to see some good movements here on AUD JPY next week. We're also going to have a little quick look at some bank research to see if they're pointing out anything new that's not in the calendar, or maybe there's some new biases we can pick up. And then we're going to have a look at if there's any questions, and we're going to wrap this video. The Danske Bank research says optimism in the market despite war dragging out. despite rushing off, I'm going to quickly just skim these articles. We have seen the markets recently. What is still unfortunately far from over, as the wide race on central banks appear increasing open from the rate hikes. Inflation pressure is updated. Fed call now 50 basis point hikes in June. Fed funds rate target ended by 2.5 to 75. Energy price volatility continues, oil prices slowing this week. SPR release. Natural gas. We maintain our view of elevated crude oil prices going forward. Natural gas price, in contrast, have moved more is higher. Russia making it increasingly difficult. Sanctions remain. The China lockdowns continue to weigh on activity. PMIs falling recession territory in March, signaling further weakness for the global economy, increasing supply chain challenges. Lockdowns will continue in Shanghai next week. Next, we'll require, in terms of economic data events from US, we'll have a range of Fed speakers as well as the FOMC minutes from March meeting, and the focus will only hints about upcoming Q2 announcements. These 3 minutes will also be released alongside a range of European February hard data, which will, however, be mostly outdated due to the war. Reserve Bank will meet Tuesday morning, but despite the global inflation pressures, we don't yet expect to see changes in the monetary policy. So also have the ECB minutes. How did I miss that? Yeah, because that calendar is painting it yellow, even though it's quite an important event. So sometimes your calendars or our calendars won't paint the events quite the way they should. So we're going to have an ECB minutes. Let's have a quick look at how Euro reacted the last few minutes. I really like to see what the reaction was. Even just the last few meetings will do it for me. So 3rd of March. Are we still in EURUSD? Yes, we are. So the last one was 3rd of March, the minutes. Let's scale this back to out of fit. We had the minutes on the 3rd of March, super bearish. Then we had on the 3rd of February, no, 20th of January. Yeah, a bit bearish, and then chop, and then the 25th of November. 25th of November, put in the bottom that day. Hard to say if the minutes are market moving. I'm going to go with not market moving, specifically given the fact that the war has probably changed a lot in the narrative there. So the mostly things that Danske Bank pointed out we already know about, so we don't need to go over it again. Let's see if there's any other news we need to know about. Here they're saying that they believe that the oil price will continue to stay elevated despite SPR release. Okay. Global weakness weighs on ISM sentiment. Let's have a read on that. Week ahead, also for another turbulent quarter. Going to quickly skim through these articles as well to see if there's anything jumps out. Here they're talking about the interest rate path of the Fed. We already know that, it's old news. The ISM manufacturing segment continues the downward trend while prices are rising faster. This could be a signal that global problems from the war in Ukraine and COVID situation in China is denting activity in the US. Decline led by new orders. ISM more exposed to global conditions, some sign of less overheated labor market. So this is the ISM PMI from the US that was printed on Friday and missed by a point. I think it was supposed to come at 58 and came to 57. Let's double check that and see if there's anything tradable out of that. So here ISM, yeah, so it was supposed to be at 58.9, came to 57. But looking at the way that markets traded on Friday, it didn't really feel quite risk off, did it? Let's check what the indices did on that day. So on Friday, quite bullish. DAX was quite bearish because I think they were worried about gas getting shut off. And the Dow Jones was quite positive as well. So I'm not too convinced that that PMI, that drop there was quite negative to market. I think it's just 1 point lower isn't quite dramatic just yet. So yeah, again, nothing new there. Check two banks now. There's a couple of more articles to read here. but not a lot else to chew on. So for next week, what we did today, we identified 2 or 3 market moving events and also a little bit of a bias. So we have one market moving event, which is the RBA, and ahead of it, we're bearish EURAUD. ISM services, we know we're going to have some good volatility on the ISM, specifically in AUD/JPY and USD/JPY, and very likely the following days we're going to see either a reversal or follow through, which we will be able to gauge once we know where inflation expectations are trading. And lastly, we will have the Fed minutes and also the ECB minutes that will actually, that's not some real trading. We're probably going to trade some around the Canadian dollar ahead or after the jobs data. There's definitely something coming out of that as markets starting to ramp up expectations of the Bank of Canada. So question comes off is a question being typed up as saying, asking, does Euro USD have any effect on all the other dollar pairs? That's a good question. And it's a bit difficult to explain because at times it does, at times it doesn't. We really need to understand what is the driver. For instance, the driver behind Euro USD going lower, was it USD? Was it Euro? Maybe it just was a different pair altogether. And that's how you can figure out if it has any effect on other pairs. For instance, if I were to pick out Euro USD and AUD USD, you can practically say yes, there's 2 different currencies altogether. Even though they have USD in them, they seem to be trading all on their own. So Euro USD quite bearish, AUD USD in a larger range. Sorry, I'm looking at a 15-minute. Let me show you the daily. Maybe might look a bit more. So AUD USD on a ripper here, absolutely rallying. Euro USD dropping and then a bit chop. So if I were to say Euro USD is affecting other pairs, that's not true. But there's times where it is true, because the key mover here would have been Euro, would have been USD, and that would have then have a chain effect on other pairs. Does it make sense? As a matter of fact, let me give you an example. 2018 is probably one of my favorite examples, because there Euro was an all-out sell, and it helped USD to go higher, and as a side effect, it dragged other pairs around as well. So let me show you, for instance, AUD USD, GBP USD. They have a better optics on it. So let's get it down to, I think the breakout happened in April 2018. There you are, about, say, on the 20th of April 2018, Euro started getting sold. So Euro USD was going down because of Euro, not because of dollar. And that had a negative effect on all the other USD pairs as well for a short period of time, not too long. So here on the 20th, on the 19th, 20th, you see it already started falling. Again, everything to do with Euro. That's why AUD USD was affected. That's why GBP USD was affected. Let's go back down here, 2018. And all the other pairs that against USD as well, they were all affected by the move, by the aggressive selling in Euro. Here the same thing actually created a huge top for GBP USD and a better part of 800 pips in a very short time span. So does Euro USD affect other USD pairs? It does when the moves in Euro USD are have logic in Euro or USD. Again, here there was a huge selling in Euro, so yes, it had an effect on other pairs. Most recently, there's not a lot happening in Euro USD, so you can see that the most pairs are trading independently. Now, Euro USD and GBP USD more or less are caught in a negative sentiment range because of the ongoing Eastern theater in Europe. But for instance, other pairs which have nothing to do with that war, I don't know, USD CAD, nothing to do with that war, just trades independently. AUD USD just saw trades very independently. NZD USD to some extent as well. You know, it trades independently of what's happening there. USD yuan, so CNH again trades. Sorry, the CHF. There's mine. There we are. That trades quite independently as well. So since probably October hasn't done a lot, but Euro USD has kind of came down. I guess a long way of explaining to say that Euro USD can have effects on other USD pairs only if the logic behind the moves are behind Euro or USD. And in another case, everything will trade quite independently, and you find that the correlation coefficient is really low or too low to make it significant. It was a good session, a little bit more detail because I wanted to cover one or two things that are driving sentiment and market for the next few days. We'll have more videos coming as the days pass, and then once we're more in other live session where market is actually moving, we're going to have possibly trades as well. That's all I wanted to cover for this week. Thanks everybody for joining, and that's all from me for today, and I wish you a very successful trading week.